Hi guys, welcome to my channel Forex with Temilo. In this video, I'm talking about the losses I took on GBPUSD and on EURUSD this week. Starting with GBPUSD, I took this loss right here. As you can see, price hit my stop loss and I was out of the trade. And I'll be breaking down why I was looking to go long on this pair and why I had my stop loss hit. So for why I took the buy trade, starting from the 4 hours time frame, I noticed that the market left behind this unmitigated supply zone right here. This zone was left unmitigated, and this candle right here was an impulsive candle, and we can also see that we have imbalance right here, inefficiency right here when the market pushed down. And also we can see that this last low right here was being taken out at this level. So at this point in time, I was looking for opportunities to take a buy trade to go long to this zone, to mitigate this zone right here. So so my target was for this H4 supply zone. And moving down to like the 30 minutes time frame now. So on the 30 minutes time frame, since I was looking for a buy trade, all I needed to do was look for confirmation before I get my entries, right? And as you can see, we had this lower low right here that pushed all the way up. Then we came back down to mitigate this demand zone right here. Okay, so once that was mitigated, price didn't go down below this level. Instead, price went up here, breaking above the previous lower high right here. So this was the confirmation I needed for me to go long. So once I saw this break of structure right here, we can also see that we had this impulsive candle right here, this bullish impulsive candle signifying inefficiency in price action. So at this level, I was looking to take my buy trade. Okay, I had my buy limit set at this level right here, and price came back from this high, retraced back, filling up this imbalance right here, mitigated the zone, and price pushed all the way up. So the market was going in my favor for some time, and as you can see, we had this set of trend line, which is a form of liquidity, because definitely we have people selling at this level. So this was a liquidity zone to target to go long as well. So at this point right here, I was happy because price broke this high, also took out this high and took out this high. Okay, but I did not move my stop loss into break even yet, because I was actually focusing on this high to be taken out, like because this is like the major high that push back down into the zone. So I was waiting for a push above this before I move my stop loss from right here to break even. Okay, so now market retraced back down after clearing out the liquidity at this zone. Retraced back down. I was still thinking, okay, price still wants to mitigate this zone the more, because sometimes we can see price mitigating a zone a couple of times before pushing up. But to my surprise, my stop loss was hit and market pushed more down, clearing out this set of low, like kind of a liquidity, trendline liquidity right there. It took it out. But mind you, this is where the concept of Asian range comes in. If I'm to turn on my Asian range indicator right here, we can see that the reason for this push down was because the Asian range low was being taken out at this level. Okay, and at this level right there, this is the Asian range high and this is the Asian range low. Using this Asian range indicator, it always helps during the London session. I always love to use this Asian range indicator during the London session, because sometimes when the market is about to move during the London session, market can tend to take out the range low first before moving in the direction, in the buy direction it wants to go. Or if it was to be a sell trade, the market is going to first take out the Asian range high, take this high out before selling down in a sell scenario. So, but in this case, it was the Asian range low that was taken out before the push to the upside. And as you can see, I could not get another entry right here, because when we add this push from this lower high to this place, I was expecting a push above this high, then a retracement back down to now take my buy trade to go up. But unfortunately, the market didn't take out this high right here before shooting up. Okay, you can see this came close, we had this push up but didn't break above this high. It came back down, mitigated this zone, and then pushed up. Okay, so that was how I missed out on this GBPUSD buy. So as expected, as previously expected, I was looking for this liquidity at this level to be cleared, and for this H4 imbalance and supply zone to be mitigated. It was really a painful trade, because it was over 100 pips that I could have secured. But as you all know, we can't win all trades. So Asian range indicator comes in handy sometimes if you use them. It was unfortunate I didn't have my Asian range indicator turned on when I took this trade, because if I had it turned on, I probably would have given myself more room for my stop loss, or probably forced to wait for the Asian range low to be taken out first before looking for a potential entry to then go long. And another example is right here. As you can see, on this particular day, we can see we have this was the build up of price during the Asian session. We had this low right here being taken out first during the London session open, mitigating this zone and then going all the way up. Okay, so and at this zone also, you can see we had this build up of Asian price. The low was taken out before we add this push to the upside. Okay, same thing happened on this day also. The Asian range low was being taken out first, took out first, then we had the push up to the upside. So you can also use the Asian range indicator during your London session in order to guide you on your trades before taking your trades. Now that was that about GBPUSD. Let's move on to EURUSD. So on EURUSD, I was a bit lucky. Let's take this out. This was before. So on EURUSD, the same scenario as well. We had this break of structure right here. This low was taken out, and by this supply zone right here, this supply zone was responsible for this break of structure, taking out this low. And once I saw that this was left unmitigated, I was looking for buys from this. I was looking for buys from this area to go long into this zone right here. So on this 15 minutes time frame, since I was looking for buys, all I needed to do was wait for confirmation. And as you can see, we had this low, we pushed up, and we had a shift in structure right here. And when we had this shift in structure, we also pushed above this this higher high that was responsible for this demand zone that was mitigated right here. So since we pushed above this high, giving us a break of structure at this level, this was a confirmation. This was the confirmation I needed to go long and take price into this unmitigated supply zone. So I go into the 5 minutes time frame now. On the 5 minutes time frame, we had this zone right here. We have this unmitigated demand zone right here. Okay, we had that zone. Okay, this zone was already mitigated at this point. So when we had that break of structure, I was looking at this imbalance right here at this zone right here, and I wanted to have my entry at this point. And if you move back to the 15 minutes time frame, going to the 15 minutes time frame, since I had about 5 pips stop loss, and we can still go and we still have this candle right here. We still have this demand zone, though it has been mitigated here. I decided to give myself room and take my stop loss to be at this low, because why not? And if you go to the 10 minutes time frame as well, on the 10 minutes time frame, we can see that this imbalance was filled up with this candle. But just to be safe, I decided to have my entry at this imbalance fill and my stop loss right there, which was still below the stop loss I would normally use. Most time my stop loss, I use up to 15 pips in stop loss, and this was still about 12 pips, so why not? So but as you can see, I got stopped out of the trade, and the reason for this was because, as you can see also, we have this Asian range low that is yet to be taken out. Okay, so the market pushed all the way down to take out this low right here. Okay, so after this low was being taken out, then we had the push to the upside. Okay, so this is why this Asian range indicator comes in handy, especially during the London session. Okay, price tends to take out the lower range before pushing up in scenarios for buy, and market tends to take out the Asian range high in scenarios for sell trades. Okay, so that was why I was stopped out on this trade. But luckily for me, I got back into this Euro USD buy after I noticed, because I was actually looking to long because of this unmitigated supply zone that was right here, and because we have these two higher signifying that we really want to push up. So I trusted my instinct and my intuitions to go long. So at this point, if you move down to like the 5 minutes time frame, we draw our structure from this high to this low, this high, this low. We broke above this high, giving us a break of structure right here. Then my focus now was on this demand zone right here. So I was waiting for price since price broke this high, I was waiting for a retracement back down into this zone so I could go long. But as you can see again, price didn't come back. Price did not come back into this zone. So first price came down a little bit, came down. I thought it was coming down. Then suddenly we had this shoot up, breaking above this high again. So once I saw this break above this high, I then took a market execution trade, and at this point right here. I decided to get into the trade at this point here, and that made me have a stop loss that was over what I will normally trade. Going to the 10 minutes time frame now, I got into the trade at this level right here because I saw the break above this high. So my mind was telling me maybe we may not come back to mitigate this imbalance right here. So I got into the trade at this level, and I had my stop loss at this point, at this low right here, because if price will come back to mitigate this zone, it will definitely be coming back to fill up this imbalance that was left behind at this zone. Okay, so I took that risk. I took the risk and got into the trade at this level, now leaving me with a stop loss of 18.5, which is above what I will normally use, but I still had my risk management in place, and my target was still on the I still had my target at this supply zone on the, let's just 30 minutes. Yeah, I still had my take profits to be at this level right here on the 30 minutes time frame, and luckily for me, my take profit was it. Okay, I think the 30 minutes supply zone, my take profit was it at this zone. Okay, so I was able to recover the loss I had from this Asian range low liquidity sweep on Euro USD and on GBP USD. I was able to recover my loss back on this buy trade. So guys, I will like you also to incorporate the use of the Asian range indicator in your trading as well, so it can guide you as well when you are taking your trades. Okay, all you need to do is go to your indicators and search for Asian range and Q zones right here, and just click on it, and you have it right here, and you can make use of it. It will show you the lows and the highs, the price range that forms during the Asian session. I hope this video was of value to you. I hope you learned something from this video, and thank you for subscribing to my channel. And if you are yet to do so, please click the subscribe button and please like the video if you find the video helpful. Thank you very much, and see you another time.